Aloha, this is Joshua Hayes at BigWaveTrading.com coming to you with the report for Friday's market wrap-up for Monday. Let's look at what happened to the NASDAQ on Friday. If we take a look at the NASDAQ, we can see that it sold off, closing near the low of the day, off only 20 cents to 1947.39. While it hit that new low, volume expanded much heavier than the day before and was above average. The only thing that was a bit different was that the New York Stock Exchange sold off and volume was lower. Now, for anybody that's like, oh my gosh, it's got green BOP, so it might be bouncing, I want everybody to disregard BOP whenever it comes to the indexes. It just doesn't work. And to prove that, the futures, I believe, are trading down like 170 on the Dow Jones, like 17 on the NASDAQ last time I looked or something like that. So that proves that when you start seeing the green, you don't just necessarily need to expect the index to turn around immediately. BOP only works on stocks. So anyway, looking at the New York Stock Exchange in the lower volume, it would look okay. But remember, as long as price is below the 50-day moving average, the white line, and the 50-day moving average white line is below the purple line, the 200-day moving average, there is no way you should be going long stocks here. And if you adhered from that from the start back here in November and then in December, whenever it crossed, you would have been out of the market by January. But instead, if you've been holding on this year, you've now got yourself a nice 27% loss in the New York Stock Exchange. So it's been a rough year. And for the NASDAQ, I think, how much are we down on the NASDAQ for this year? We are down 26%. So it's been a rough ride without a doubt for these indexes. But the pickup in volume I find very troubling for the NASDAQ, considering it came on such strong volume, with the relative strength line going into new low ground here, confirming the price action. So it just looks like more problems. Let me come out here and let's review some things. Let's look at the S&P 500 up close. I mean, there's no difference in it than the S&P or than the New York Stock Exchange. So there we go. Let's go to the dollar. Remember how everybody's talking bearish on the dollar, how the U.S. dollar is going to get destroyed? Well, my charts say that everyone is wrong. And anybody that's been long since the August move above the 200-day and 50-day moving average, you have a 6% gain on the dollar, and in futures, I guess that's what, a 5,000% gain? I don't know. I don't mess with the futures market anymore. That's not my game or style. But anyway, the U.S. dollar looks nice and strong. And for people telling you that you should go into gold, just take a look at gold. I mean, is gold making a move on this rally? Absolutely not. And what do you have here with gold that I told you about? You have the death cross, and now you have price once again below the 50 and 200-day moving average, and it doesn't matter. As long as price is below the purple and white line, there is no reason whatsoever to be long gold. So all the people that were telling you to buy gold and everything, that day has come, and that day is probably not gone, but I mean, look at the run gold's had since 2001. I mean, that's at least 260% gain, right? So it's like gold has come 260% up here. If anything, it's headed lower, not higher. So for all those gold bulls, I have to tell them, why do I have a death cross and why do I have price that can't seem to get above now a trending lower 250-day moving average? The death cross will work. It always works. Not always, but at the start of new trends, it always works. Just like on the NASDAQ back then, just like on the S&P 500 back then, and then on the Golden Cross for the U.S. dollar after forever being in a downtrend. You know, it just shows up in a while. Let's take a look at the Dow Jones Industrial Average, making lower lows, but a strong relative strength. That shows where the people are hunting for safety in the big caps, or else you wouldn't have a strong relative strength move like that. But the only thing that I'm happy about is that the VIX is playing around with that 45 number. If we can get a sell-off tomorrow in the VIX to 50 to 60, that would be great. That means that we're getting more near the lows that I'm looking at for a bottom. I think that we need to be honest with you, the way that the charts look, yeah, we probably need to test the 2002, 2003 lows. So, I mean, that's a long way down for a lot of indexes if you look at them. So, but that's where I'm looking at 2002 lows to hopefully hold a support. If it doesn't, uh-oh. But yeah, that's the S&P 600 not looking healthy. Russell 2K confirming it with the NASDAQ. Yeah, and they're just weak indexes with a high VIX, meaning that we're getting closer and closer to that magical bottom. Yeah, right. I doubt that we're going to have a bottom that easily. It's got to be harder. And the CBOE OEX VIX is hitting the 51 range, which is almost higher than I think what it was in 2002. So, or yeah, so that's good to see. So this is all good to see. I don't think that we're gonna have a bottom and rocket off the bottoms like I mean we did in 1987. But if we did, that would be fantastic. However, I think government meddling in our business is bad, and I think the bill that they passed is I don't know. I think it's bad, man. I just think it's bad. I think the government getting involved in the markets, anytime you mess with free markets with regulation, is just bad. Sarbanes and Oxley has caused the IPO markets to flood up because coming public just doesn't make sense anymore. The risk reward isn't there for a lot of companies, especially with a market this ugly. I mean, obviously you're not going to come public in a market this ugly, but even before, I mean, even if we were going up we would have more IPOs than we did in 2006 and 2007 if we didn't have Sarbanes and Oxley. And after this bear market, Sarbanes-Oxley is going to be a hindrance to new companies whenever they do come public. So for now, I would say far away from the stock market if you're a long-term to intermediate-term kind of person like me, because with price below the 50 and 200-day moving average, you can guarantee that you're not going to find too many good-looking longs, though I will show you all, or end it on with one good note. LPHI, number one industry right now, I think it's like investment banks or something, or like, I forgot what it is. Whatever it is, it's like the small bank area or whatever, like for these financial like investments. Oh man, I gotta look at my IBD groups. But anyway, we'll just get a look at this here with LPHI. This will tell me the group it's in on the weekly. Insurance brokers, so it's the number one group right now, and as you can see, the top stock in that group. Beautiful base. When you have a ton of charts like this start to show up, and whenever you have like 10 to 30, that's what I call a ton. Whenever you have 10 to 30 that start to show this pattern, you can be pretty sure that the bear market will be over. The only problem for LPHI is the downtrend in BOP. BOP is going lower. I like to see BOP rise and go to max green and stay at max green while it bases sideways before it breaks out. But still yet, if this happens right here, if you see this, whenever this base ends, you can be sure that I'll be going long this stock. But I'm going to go and wrap it part one up for there for BigWaveTrading.com. This has been Joshua Hayes with your market wrap for Monday. I hope you guys in the early mornings have a good time with whatever happens. I know one thing. I'll make sure I'm going to miss the morning. Aloha.